Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Was scrolling through the comment section, looking at some of this stuff. They were talking about precious metals, and someone says it doesn't seem like such a great deal when you take into consideration taxes and premium. Uh, I'm not saying anything about taxes. I'm not a tax specialist. I don't want to, persuade you in either way, but most of the time, what you have to do is you have to report those taxes. You do. If you trade with a dealer over a certain amount, a 1099 is required. For palladium, it's 100 ounces. For platinum, it's 25. For gold, it's 25. And for silver, it's 1,000 ounces. So if you transact in quantities greater than that, a 1099 would be required by the dealer. If you transact at those quantities or less, the dealer will not do a 1099. You will be responsible for reporting your taxes. I just wanted to make sure that everyone knew that. And this is not tax advice, just letting you know what the requirements are. So that's what the thresholds are. Now, my opinion on this. An ounce of gold is an ounce of gold. It's always been an ounce of gold, irrespective of how much dollars it takes to buy it. If you get a gain on gold in terms of paper dollars, the way they built the system is against you because you don't actually have a gain. That was the dollar losing. You didn't gain any more ounces of gold. You didn't gain any more ounces of silver buying silver and having the dollar price go up. So I would argue that you don't even have a gain. No gain can be had if you own a single asset when the dollar goes down in purchasing price. Now, there could be a gain only because you know how to play ratios and you're gaining against the purchasing power of another asset. But the whole tax and how they're written is very it's weird. And I don't know how you could charge a state sales tax on something that's written into the Constitution saying that gold and silver are money. How you're going to tax our money? There's a lot of states that don't have taxes, sales taxes on gold and silver. Maybe go and buy it from those states if you want to make a large purchase, so you don't have to pay the tax. Maybe they can ship it to your house and you get to skip out on all the taxes. That's what I do, is I buy it in states that don't have state sales tax. The premiums. So when I was first buying these things, the premiums were incredibly low. Incredibly low. They had premiums of like 19 cents per ounce over spot in silver. For regular bullion, it was like bullion rounds, bullion bars, and I bought a lot. That was back when it was like 18 bucks, 19 bucks, 20 bucks. Way back in the day. This was back not in 2018. I'm talking many years before that. I remember buying the first ones I bought 100 ounces of 10-ounce bars. They were Heraeus bars. I paid 18 bucks for them, and that was after the premium. So it was $1,800 for 100 ounces, and I bought it through eBay. That was a long time ago. And as time has progressed, the premiums have gotten higher and higher. Now, you guys are looking at this from an investment standpoint. I look at it as my savings and the ability to survive a monetary collapse. And then I do my swapping of metals to increase my ounces of holdings of certain metals. So I'm actively using ratios in my metal holdings, which right now I own a lot of silver and platinum. Silver is my largest holding by a good amount, only because it was cheap for so long, and I could get my hands on it for very cheap. There were people selling it, and I got some incredible deals through Craigslist where I could buy hundreds of ounces in a shot for very good prices. We're talking like at spot price, zero over spot. And they were really good coins. You know, they were branded, minted coins. I got Eagles, I got Maple Leafs, I got Liberty Freedoms that were SD bullions. I mean, and we're talking 300-400 ounces here and there at spot. I paid $17.75 for the Liberty Freedoms. I was paying very low over spot for American Eagles at the time. I've got monster boxes all over the place. I bought it when it was really, really cheap. And when you know the ratios, if you've been on this channel for a while and you know the ratios, you buy when things are down, and when they're down, not only is the price cheaper, the premiums contract too, because nobody wants it. So I was buying platinum for like $30 over spot, $20 over spot, and then it started getting bigger and bigger. And I'm still buying platinum, but the premiums have gotten quite large in relationship to what they used to be when I was buying it way back in 2019 and 2020. And this isn't about, it's not about making necessarily money. This is like, I mean, look around, the currencies are getting smoked. People are going to start to run to this. And if interest rates go up, historically, it shows you that that's the spot to be. And as the world goes in time, these metals are going to get harder and harder to extract out of the ground. There's going to be less and less of it. And at some point, and this is my opinion, I don't know if I'm going to be right or wrong, but you know what? I'll take the bet. I'm taking the bet in a massive way. I don't think you'll be able to buy this stuff. So what's the value then if you have very difficult times acquiring these metals? And these metals have monetary aspects. They've been a store of value for thousands of years. You can transfer these metals between generations without really being taxed because you're out of the system. I'm not saying that's what you should do. I'm not saying that you should avoid paying taxes. I'm not saying any of that. What I'm telling you is that you can buy this stuff. It's out of the system. So don't take it as tax advice. I don't know anything. I'm not a tax advisor. I don't want to pretend like I am. But this stuff's not going to be around much longer. And I don't think you'll be able to buy it in investment format for much, much longer. And what you're going to see, and this is a projection that I have, is you're going to start seeing large companies start to acquire mining businesses so that they have mines feeding their businesses. They're going to vertically integrate all of the strategic materials. And if energy gets a lot more scarce, these materials get more scarce. It's going to be harder and harder to pull out of the ground with declining ore grades and with increasing energy costs. And remember, energy, it's not about the price in dollars. The dollars don't even matter. It's about the energy. When energy gets more scarce, and I don't know if we're going to get more scarce energy in the future, maybe they develop fusion, who knows? But if it gets more scarce, these metals get far more valuable, especially ones that are in your hand, in your pocket. Everything else won't matter. What are you going to invest in? You're going to invest in businesses that have shortages of their inputs? You own the input. If silver's the number 2 commodity in the world, well, you own that. Oil's number 1. If oil gets more scarce, what do you think the price of oil is going to do? It's going to rocket because it's used in everything. So the way that I view these things, you buy these assets when they're incredibly cheap, you hold on, and then you just ride. You just ride it. And some of it's not about making the most amount of returns. It's about capturing and locking in what you've already put, your hard work that you've already put in there. The dollar and all these currencies, I don't think are good stores of value. So I don't store my value in it. So he says, but if you look at it as an investment, which will appreciate a lot, I don't think there's a ton of upside based on the premiums and taxes. Your premiums go up with the price of the metal. And taxes, if you're in a state, some of these states don't have taxes. Maybe go to those states and get out of the ones. I mean, if you're in a state that's taxing you to death, I mean, I know what I would do. I would leave. And that's what I did. I left the state that was taxing me to death to a state that is much lower in taxes. It says a 10-ounce bar of silver is trading on eBay for $270, which is $27 per ounce, which is 20% over spot. When I bought back in the day, the premiums were teeny, like they were nothing. I bought all sorts of stuff, guys. I bought collector's coins. I bought bullion. I bought government issued coins. I diversified my holdings massively. And I think the premiums are going to continue to go higher until you cannot get the metal at all. What is the metal worth if you can't get it at some point? You may even see the premium go over the actual spot price. Where the premium, let's say the spot price is $30, the premium might be $30. Because guess what? Everybody wants it. Nobody wants to hold the dollars. And if the COMEX price isn't moving and everybody wants the physical, well, then your premiums just continue to go up. You're seeing shortages of that specific type of metal and or the way that that metal is presented to the person, investment grade or whatever it is. So, I mean, you can try to dissuade yourself or convince yourself that you shouldn't be buying it, but I'm letting you know, if you don't own anything, I would own something. That's me. The physical metals are so rare in comparison to how many people we have on Earth. It is ridiculous. When I was looking at the metals in 2018 and I was buying the heck out of them, I mean, I bought a lot, guys. I loaded up and nobody was talking about it. I was like Han Solo over there. Like nobody was there wasn't that many people buying. I mean, some people were still buying it, but there wasn't a lot. And that's when I was loading up. I mean, I was just like, it's like every couple of weeks, I would be looking on eBay. I would be looking on Craigslist. I would be looking at dealers. I would be looking at online specials through some of these dealers, JM Bullion, AP Max, all of them. And what I would do is if there was some sale, I'd be like, oh, I'll pick some up because most of them had free shipping. Energy's cheap. If energy is cheap, we're pulling this stuff out of the ground when the energy is cheap, which then means that this stuff will be the most plentiful when we have the greatest technology at the cheapest energy price. Because they're getting a little bit more efficient at sucking these things out of the ground, not just taking them out of the ground, but sorting them through it and obtaining them that way. What happens is the technology will still increase, but you have this barrier between you and the metal called Earth. You still have to yank it out of the Earth, which takes a whole bunch of energy, irrespective of how efficient you get on the backside. You'd have to have basically fusion to change this entire game, but then you just literally would make the Earth Swiss cheese as you put all these holes in it. But I think that for some period of time, energy is going to get more expensive, not cheaper. And it's going to get harder and harder to extract with the declining ore grades. And there's your opportunity. So I bought at the best potential opportunity because the ratios were the cheapest against other assets. The market conditions were out of favor for the metals. And now, when the market conditions become more favorable, you're going to have so much money run at this that there's going to be nothing left. It's going to be so difficult to obtain. Now, that's my take on it. It doesn't mean I'm right, but I'm preparing for that outcome. Now, if that outcome doesn't happen, usually these do well anyway. Usually they go up during these market conditions. Usually they are a good form of an inflation hedge. And if you do your swapping of metals that I've taught on this channel, your returns are better than the S&P 500 and you're out of the system. It's a win-win. There's no losing there. So although there's frictional costs in dealing with physical metals, that obviously that you have talked about here, it's another way to diversify your holdings. And I've got techniques to increase your ounces in your stack. So, I mean, that's kind of my take on it. I'm a huge physical metals bull, guys. I do not like I don't like the tax system. I don't like how they can tax. Basically, they create inflation. You get a fictitious number of gains, and then they tax that fictitious number of gains. Does that make sense? What happens is if you own $100 at the beginning of 2021 and your stocks go up 10%, but the value of the currency goes down 10%, you didn't make anything on your stocks. All you did was kept pace with inflation. And then they tax that 10% gain. But you never had a gain. You lost in purchasing power. So they taxed something that they taxed you twofold. They got you on the profits, so-called profits of your gain, and then they taxed you through the currency, which the currency declined 10%. So you lost your purchasing power. You would have been better off in the beginning of that $100 and never spending it, or spending it right off the bat and getting some sort of product that you could use, than trying to speculate, take on risk, go into stocks, gain 10%. They tax it. So let's say it's a long-term capital gains of 1 year. That's 15% that they take. You get $8.50, but they stole $10 out of the currency that same time. Of course, you're going to look at the CPI and they're going to understate the CPI. So the whole game of investing is to beat that inflation. So how do you beat the inflation rate? Then you have to look at other rate. You have to look at ratios, because the dollar is, you have to take the dollar pricing out of it. The dollar pricing is irrelevant. You have to be able to purchase more of other things. That's the name of the game at that point. Because the dollar you can't use. It's getting debased. We don't know what the value of it is. It's garbage. It has no value. So now you're looking at relative value in terms of assets. So what you have to do is you have to buy an asset that's low and it appreciates against this other asset. And then you swap and buy this asset as this one swings back. And all these things do is they do this over time. They swing back and forth against each other based off of supply-demand characteristics. Supply-demand characteristics moves these things up and down. They move, all these move up based off of the inflation that's in the system. And what they're doing is they're taxing this move as it goes up. They're saying, oh, you're making money, but you're like, no, I'm not making any purchasing power gains against either one of these assets. They're going up the same rate. Then you have to pay taxes on the inflation that's pushing these things higher. It's a great system for them. It's a horrible system if you're trying to increase your gains in this system. Now, if you're in a metal and you're swapping metals, what you're doing is you're using the ratio, and you're moving this ratio that's cheap here to this one that's expensive. You buy this one here, it swaps up, you sell this one, and you buy this one. You netted that difference in the movement. And then eventually it'll come back like this as demand-supply characteristics change over time. That you're actually gaining in real purchasing power gains. And then these are both moving up together as inflation goes into the system. The inflation is nothing more than the supply-demand of dollars. This system is inflationary. That's the way it is by design. The deflationists, that's just small bouts of deflation throughout time. Overall, the system is very much inflation. We've had one small little bout of deflation in 2008 and 9. That's it. We've not had deflation since that time frame. And that was a housing market crash. So I know that you guys are trying to look at this and evaluate precious metals as like a stock, but I think that that's not the correct way to evaluate it. You're either going to have this stuff or you're not. And in my opinion, I mean, I bought this stuff when it was cheap. I'm continuing to purchase it. I mean, this is basically the way to play the anti-debt unit of dollars and bonds. My question is this: okay, so you say let's just say like someone doesn't agree with me, which is fine. But my question then would be, if you're in stocks and they're all priced in dollars and the dollar goes away, what happens to those things? How do you get out of it? If the dollar goes to zero, how do you get out of those stocks? You're caught in it. You're stuck. You're done. You'll have to stay in it because that's the only thing that will retain its value, is owning that. You can't transact out of it. You're literally stuck in it. Now, with physical metals outside of the system, you can barter, you can do things. You have more flexibility and opportunity to do things. Now, this is in a world that goes quite dramatic, where we have high rates of inflation. Maybe that never pans out. It might not. I'm not calling for that world, but what I am saying is that world could exist. It could. So why not prepare a little bit of your money for it? If you look at long-term returns, I don't think people are beating me. I'm beating the S&P 500 by swapping my metals. I'm beating it. Why not do it? My palladium did incredibly well. It absolutely smoked the S&P 500. Now, did it smoke all? I mean, I'll just do the peak to peak, bottom to peak, I should say. Bottom to peak, I'm just going to use 3,000 divided by one. I think it was at 160. It did an 18.75 times your money in a 10, 11 year period. There isn't much that has beaten that. And rhodium went ballistic. I think it went to like 29,000 divided by 650. It did a 44x in 5 years, 6 years, 5 years. 44 times your money in 5 years. Now, that's if you had bought it when those metals were cheap against all the other metals, but platinum's in that position right now. We'll see what happens. I'm not going to say that that's going to do it. You know what? I'm taking a lot of money, I'm putting it in it, and I'm taking my chances and putting it in platinum, the physical metal. Now, platinum in South Africa, it's roughly 70-80% is produced in South Africa. They're having problems. They're not increasing their throughput. They have declines. Platinum's been declining since 2006. And 2007, 8, and 9 were very high dollar years for platinum. They were $2,800 or something like that, or $2,300 or whatever it was. So if they have a problem in South Africa, where let's say electricity, something happens, their grid, 75% of platinum goes offline. And let's say we have an energy crisis and that doesn't come back. What happens? How much is platinum going to be if you own physical platinum? I mean, you could see a massive, massive move in all these platinum group metals because they're so concentrated in one little area. That would be good for palladium, platinum, and rhodium. They would go through, go to the moon. You're going to see businesses have problems if their inputs are having problems. Fertilizer is going to go through the roof. It already has. Natural gas could go through the roof like it has. So if that happens, if energy prices go through the roof, these will go through the roof and you're protected. That's just my take. I mean, I'm a huge precious metals bull because I don't think they'll be around in 20 or 30 or 40 years. I don't think they'll be around in the quantity that we are producing. I think we are going to decline. Gold's going to decline, silver's going to decline, and platinum's going to decline quite dramatically in output while we are exponentially increasing their uses. And if the value in these metals for the utility to society is so great, the value should go, the price of that should be revalued much higher. And they should take a larger valuation against other assets in the real world as people need them to run businesses and all these other things that we want to do in life. But that's my outlook. Obviously, people are going to say, oh, there's going to be substitutions. I don't think so. These things are pretty unique in their characteristics. I think that the products will degrade quite rapidly. So I think that they're going to be priced much differently than where they are today. Cheap energy, yeah, we can get these things out of the ground still. Declining ore grades, it all ties back together to that. If you guys like this analysis, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.